The next part of the worksheet that we're going to look at here with this managerial accounting, we're going to be looking at the equations and these boxes that I've given you and set up to try to help you see how things flow and what things look like. We are going to go back to our worksheet, and what I have done on this worksheet is I have gone through and crossed out those items that are either balance sheet items or period cost that we had looked at in the last video where we had gone through all the costs. And I've just left the items that are going to be found in these boxes. So the first box that we are looking at is going to be this material inventory account, because remember, we have 3 inventory accounts with our manufacturing accounting. We have our material inventory, we will have our work in process inventory, and we have our finished goods inventory. And looking at material inventory, what we're going to look at for this is this beginning inventory and ending inventory, and then we will also be looking at the raw material purchases that happen in this particular one. And so what you're going to look at in filling this out is you will have your beginning inventory, and your beginning inventory is at November 1st, and it is $38,000. The ending inventory is what we have for November 30th, and that is at $52,700, and then the amount that we actually purchased is at $184,500. And so these are some of the amounts that we can fill in based upon what we have on the sheet, and this is going to really help us in working any of the statements that we're going to have to work. So when we look at this particular equation, we have beginning inventory, and then anything that comes in would be added, so it would be plus purchases. Anything that goes out of the box would be subtracted, so that would be direct materials used. And what that's going to do is that's going to equal what the ending inventory is. Now I can change this equation around by using algebra, and I'm looking for my direct materials used. So direct materials used is going to be the beginning inventory plus my purchases minus my ending inventory. So if I take 38,000, I add my purchases of 184,500 to that, and I subtract out this ending inventory of 52,700, then I will be able to find out what this direct material used amount should be. So whenever I take this and I do the math, I end up with direct materials used being 169,800. Now this amount is going to be leaving this box 1, and it is going to move over to box 2 as coming in. So I'm going to actually write this up here for box 2. So now we've used these items in that particular box, and so that means that we have now gotten rid of those, and we will not use those again. The next box that we look at is this work in process box, and so this box is the busiest box. It has a lot of stuff coming into it because remember that this is really looking at what is going on in the factory. So the things that we're going to be looking at here are those direct material. We're also going to be looking at these work in process numbers here. And so we have our November 1st, which is our beginning, which is at 52,700. The other things that we know is our ending inventory on November the 30th is going to be 42,000. And then of course we know that we have the 169,800 coming in. Some of the other things that we see here, you'll see this direct labor, and that direct labor is actually does have a number that we can use, and that is at the 42,000. And so that is what we're going to be looking at there. Some of the other things that we can look at here is this manufacturing overhead. And the things that are going to be included in manufacturing overhead are those expense items that are product costs that don't fit as direct material and don't fit as direct labor. So some of those items that we see will be the factory equipment, the factory supplies, the factory utilities, indirect labor and indirect materials are also items that would go in to the manufacturing overhead items. Rent, repairs, as far as factory equipment goes, all of those would be part of our manufacturing overhead. So what I am looking at with all of this is that my direct material is going to be equal to $169,800. My direct labor is $42,000. And then I have to look at this manufacturing overhead. And for manufacturing overhead, I am going to add up all of those amounts that I have, circled with that brown. And in this case, it's going to be the depreciation for the factory equipment, which is at $16,800. And then I'm going to have the factory supplies used, which is also at $16,800. Then I have the factory utilities at $10,200. I will have indirect labor at $48,000. And remember, indirect labor here is the labor for our production supervisors or our line supervisors that don't actually have their hands on the product, but they are supervising that direct labor. Then we have our rent for our factory equipment, and that's at $47,000. And then we would have our repairs on factory equipment, which is at $4,500. And that is going to give us a total in manufacturing overhead of $143,300. And so those are the amounts that would be coming in. And looking at these equations, you notice here that what I have is this total manufacturing cost. And total manufacturing cost is going to be direct materials plus the direct labor plus the manufacturing overhead. So if I add all three of those items together, what I am going to get there will be the total manufacturing, the total manufacturing cost. So in this case, by adding those together, my total manufacturing cost is going to equal $35,100. Now you will have to be able to work these equations on your test and know what you are looking at. And so that total manufacturing cost is very important in both the statements and in working these equations. And the reason I say that is because you're going to use that total manufacturing cost in figuring out what your cost of goods manufactured is. Because with cost of goods manufactured, you have to use the equation and the equations that we're looking at here, if we look at it, it's beginning inventory plus total manufacturing cost minus cost of goods manufactured equals ending inventory. And this is for that work in process inventory. So it's the beginning work in process and ending work in process inventory. The other way of writing this is cost of goods manufactured equals beginning inventory plus total manufacturing cost minus the ending inventory. So in this particular case, what we're looking at here is we do have, and no, our beginning inventory is at $52,700. Our cost, total manufacturing cost was right here at this $355,100, and then our ending would be at the $42,000. And so if we put all of this in, what we find is that our total cost of goods manufactured is actually going to be equal to $365,800. And this figure right here is actually going to move forward in here. And so it will be right here at this $365,800 is what we would be looking at for that cost of goods manufactured, because it's coming out of box 2 and it's going to be coming into box 3. So when I look at what I have left and what I haven't used so far, I'm going to go through and cross out everything that I've used in previous boxes. And so the only thing that I am actually going to be left with in this particular box that goes with this box are actually the finished goods inventory for the beginning and the finished goods inventory for the ending. And so the beginning inventory would be at the $72,550, and the ending inventory would be at the $68,800. So looking at the equations here, for finished goods, I would have my beginning inventory plus that cost of goods manufactured minus cost of goods sold equals the ending inventory. And this equation also could be transformed, and I did simple algebra, and I can get cost of goods sold equals the beginning inventory plus cost of goods manufactured minus the ending inventory. So in this case, I would start out with the $72,500. I would add to that the cost of goods manufactured, which was at $365,800, and then I would subtract from that the $68,800 is what I would be looking at there. And that is going to give me my cost of goods sold being equal to $369,500. And so now I can fill out all these places in the respective boxes, and once I have that information all filled out, I then can go in and prepare the statements, and that's what we're going to look at in that next video, is going to be looking at the cost of goods manufactured statement as well as looking at the cost of goods sold statement and how those fit in with what we're looking at, as well as possibly looking at what the balance sheet portion should look like.